What's going on, guys? I'm going to show you this whole 200 EMA thing that you guys are talking about, but it doesn't start with the 200 EMA. It starts on the 4-hour time frame. So it starts with your research that you do on the 4-hour time frame. The 5 minute, 1 minute, and 15 minute 200 EMA, even the 30 second, they're all going to change as the day goes on. They're going to move as time moves to get closer and closer to the candles. The shorter the time frame, the closer the 200 EMA is, right? So when you're over here in TradingView, first off, come to this little pocket watch right here, and then you're going to see these three dots. Click those three dots and click remove all inactive alerts. And then you're going to click on them one more time and just click stop all. And that'll take off all of these alerts. And then what we're going to do here is we're going to right click on any empty space on the screen, come down here and click remove drawings, giving you a fresh screen to start with. Click on this box right here. That'll bring back up your wish list. You have to start on the 4-hour time frame in order to understand how the 200 EMA thing works. What you're looking for is consolidation, high points, and low points on the 4-hour time frame. So right click right here. Immediately, even just glancing at it, I see a high point. I'm going to put it above the wick right here as another high point. And this right here will be like a demand zone for me, right? So highlight that. This box is my demand zone box right there. Undo that. Let's try this again. Right here to right here is my demand zone. And then I'm just going to slide it across further out in the month because it's going to stay until, like, we actually break it or whatever. And how do we know it's a demand zone? Well, it was acting as resistance right here. It's acting as support on this end. We do wick it out. We do come beneath it. It's going to happen. But for the most part, we hold up. So now right here, we'll put another line. And on this alert, we'll put a trend line. And the trend line is simply there to act as a level of support. So when we get below the demand zone, there's a level of support right there. There's actually two levels of support, but this is the most important one, right? So that's the breakout. This used to be resistance. This used to be the high. We broke above the high. So now this is support. It's acting as support. Why did we break above the high? The high ended right here. That's why this whole box is support. Now I can bring it down to the blue line, but the blue line has its own relevance because it's the bottom of those candles there. I do from the top of the candles through the entire wick on the 4-hour time frame. Now where's our current high? Our current high is right here. You're going to go ahead and right click, add alert, and then boom, make the exact same box that you made over there to the top of this wick as well. And that is our current high. When we break out of that high, we'll move on to another level. But right now, we're inside of this high. And this will act as your supply zone for a while, actually. Now, we're going to go back in time to the 1 hour. The 1 hour time frame, we're going to find levels here as well. So you see consolidation before we pushed up right there. You're going to add an alert to it. Or you're going to attempt to add an alert to it. Bam. Boop, bop. And then we're going to put a trend line on it. Why are we putting a trend line on it? Because this is a level of resistance or a level of support if we're above or below it, right? Next up, you're going to go to where the consolidation ends right here. Add an alert to that area right there. Put another blue line across that area there. Why? Same thing. Watch. As we're going through our week, this was resistance. Once we broke through with this big candle, it became support. Now look at my two blue lines and look at how they intersect. We go from this one to this one. It becomes resistance, becomes support. Go into the actual supply zone. Push down on the supply zone. Notice, we come back to support and we stop. We go back up for a second and then we break through support. When we break through support, we get to a lower area. We go down to the lower area and we mark that out on the 1 hour time frame. Every time, right? Put a blue line there. You're going to start to see that as you do this more and more, you're going to notice that these hold up the entire time. So we're holding up there, we wick it out, and you're going to wick it out because this full area is consolidation all the way down here. This is a major point of interest right here. This wick down is where we would go to next when we break this area. So when we break that low, we'll go down to this wick area and look at that. Notice what's happening. The 200 EMA for the 1 hour has come from all the way down here, and it's slowly curving to meet this wick, to meet that lower level. Go ahead and stretch that out. So these several zones are enough to get you started on this week's price action. Obviously, we have all this down here to work with, but notice as we go back in time on the 1 hour, we hit there. I marked this out. I want you guys to realize that. I marked these out on the 4 hour, right? As we go backwards through the 1 hour time frame, notice we hit every time. We hit. If I go back, I can stretch this back as far as time goes or whatever. But at a certain point, we were just down below it, and then this is before we broke out. So this will be another key area right here, the area that we were looking to break out of to go to this area. I'll go ahead and I'll put a blue line there, and I'll stretch it all the way across. And you'll notice that we intersect, we hit, it works as support and resistance throughout the entire time that we've been trading. I'll go to the 4 hour because it's so much easier just to make that a big line on the 4 hour time frame. And so these points are all levels that I'm looking to come back down to. The most important part is this part right here. When you see a wick come down and touch where all of these bodies are, that is a very important level. That is an area that we're looking to return to. So you have to mark these out in order to understand how to use the 200 EMA. So before you even get started on that whole 200 EMA journey, you need to know how to break down your 4 hour time frame. All of this stuff in the middle is not what you're looking at. All these breaks in the candles are what you're looking for. All the wicks and stuff that's happening down here, all of this consolidation, all this up and down, up and down, up and down is irrelevant. There are levels, there are hard levels that you're looking for, and on the 4 hour time frame they are created, and as you go back through the 1 hour time frame, you see them interacting. Now when we get to the 200 EMA thing that we're talking about, notice we pushed down off of this ceiling right here, we hit the 200 EMA, we wicked through, we came back up. If we don't get into the body of this candle, if we don't get up into this area here, you know that we're going to continue to the downside. So when we get back on the other end of the 200 EMA, you can take it to the downside. That gives you from 68 all the way down to 40. That's $28. You know, these candles in the 1 hour are massive, but in reality, they happen on smaller time frames. So we're going to go to the 15 minute now, right? And we're going to get a trade that I just took. Just a trade that I just took. It made me $400. What did I do here? All right. We're going down. We wick through the 200 EMA. Notice my blue line. This blue line that I drew on the 4 hour time frame. Notice how relevant it is. It actually intersected with the 4 hour time frame here. It used to be resistance. Now it's support, right? We came down to the support. You can take that trade to the upside. Boom, it pulled back up in there. Free money. Next candle, same thing. Back above it. Now we're moving back towards this end right here. So it's just understanding your support that you drew off of the 4 hour and how it interacts with these candles. Two trades to the downside. We hit the 200 EMA. I get out. We wick through. We go back up. I could have got back into the upside. Trades like this, you'll learn how to take over time. They're not important right now. Now I'm trading off of the 1 minute time frame, right? So let's refresh. So the 1 minute time frame is going to show you really cool how the 200 EMA works. So let's just go back to earlier in the day. 9:30 in the morning. How do I know what's going to happen off of at 9:30 in the morning? Well, at 9:27, we were pushing down through the 200 EMA for the 1 minute, right? I now have the 1 minute as the most important 200 EMA of my day. We break through 9:29. We go all the way down here. 9:30, we come up to the, let me zoom in so that you can see it better. 9:30, we come up to the 23 EMA, can't get all the way back up to the 200. We're going to continue to ride the trend. Continue to ride the trend. Continue to ride the trend. Pull back to the 9, continue to ride the trend. Pull back to the 9, continue to ride. Honestly, I would have got out right here. There's no way in heck a wick that big is ever going to keep me in a trade. But off of the 200 EMA, I would have got out. I would have got in at 9:29, rode that down there, and when it started to pull back, I would have naturally been kicked out. That is 58.65 to 58.60. That's $5. The whole move over 3 minutes, over, and that's what I want you guys to understand. Over 3 minutes, we get in 9:29, right? Because we're right at the underside of the 200 EMA, so I have to get in there according to how I set my trades up. We've been going up and down through it, and that's what you got to understand. Very important is when to use your 200 EMA. You can't, I mean, you can actually take it for like a lot of trades, but there are times of day when it's more important. We've been struggling to get back up. Notice that we're getting lower highs, and then we finally break down through it. When we can't get back up to this area right here, I'm like, we're going down. 930 hit, 929 hits, we shoot down. We pull all the way back up. And as long as we don't go back up here, you're still in that trade because you're still good. Now, me personally, after I got $5, I get out of that trade. I don't like to see it pull back. I'll just get in on the next candle. I'll get out. I'll get back in. So the next minute comes, 9:30. We pull back to between the 9 and the 23. We take it from the volume imbalance there all the way down, pulls back to the 9. We're cool now. We've gained so much money, like $3 there. We don't have to get right out, right? We get another big push down for the minute. So we go from 63 to 56. So another $7. This pullback right here got me out of the trade, 932. At that point, we're going up. So now your 200 EMA still active. We're pushing down, but notice my blue line from the 4-hour time frame. It's telling me that we have opportunities to take trades to the upside from here. They go up to the 9 EMA, I get out. They go up to the 23 EMA, I get out. They come back down, they break through, they wake through. When it's struggling to get up like this, I'm like, okay, I'll wait for it to get back above the blue line, and then I'll take my trade. When we get solely above the blue line, when there are no more wicks down into there, then I take the trade. Why? Because that it means that we're heading for a breakout. We've been up and down and up and down and up and down and up and down and up and down. We're above my blue line. We're heading for a breakout. Why? We're in the uptrend. 1, 2, 3. 1, 2, 3, 4, 5, 6. We're in the uptrend. This final one pulls back, but that's okay. I got in right here. I got in at 10:01. 10 o'clock is up and down. It's telling me that we're continuing the trend. 10:01, I'm in this trade. Boom, 1 minute, 2 minute, 3 minute, 4 minute. And you're talking about going from 54 to 64, a $10 move in 4 minutes. Okay, but now we're getting back to the 200 EMA, right? Since we're in an uptrend, I know we're going to get a strong pullback at some point in time. It's going to happen at 200 EMA. We get a strong pullback at the 200 EMA to the volume imbalance. We don't make it all the way to the 9. As we're going back up, you have two choices. You can wait it out until we get through it, or you can take it as it's going back up. I wait until we get through it. I get in here at 58.62. Guess what? 1 minute. When we come back down to where this candle ended and we start the next candle going up, I'm good. I'm good. I'm good for the 1 minute, the 2 minute, the 3 minute, the 4 minute. Unfortunately, how I trade, I get kicked out on minute 5. So I miss out on all of this, all this extra stuff. I don't do consolidation that often. So once we start to pull back off the top of this candle, I'm chasing the play. But even that is from 62 to 67. That's still $5. That's a great trade, right? So we start to pull back. We're going all the way up. So now I'm missing out on all this, right? So what am I waiting for now? Well, I'm waiting for us to top out. Just like we did down here where we couldn't break. I got this level right here, this blue line right here. We're wicking it out. We're coming back to it. We're wicking it out, coming back to it. Up, 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 down, up, down, down, down. When we break it and we get through and there's no wick, this next handle right here is me. 1037, downside. 1 minute, big push. 2 minute, big push. 3 minute, big push. 4 minute, we hit the 200 EMA. Notice right here, we hit the 200 EMA and we reject going back up. Happens all the time. You could have took just that trade from 64 to 66, get yourself a $2 move, right? Or you can just wait for us to go down and through. When we go down and through it, get into that trade. As soon as we cross through, going down, you get 64 all the way down to 58. You get yourself another $6. It starts to consolidate and pull back. When you pull back to the equal lows, you know equal lows mean let's go. Equal lows, it starts to push up. We're struggling, just like the 2 times that I taught you before. When you're struggling to get over these levels and you're not breaking out, there's a difference. When you get a massive pullback like this, there is a difference between pulling back and about to reverse and continuation. Continuation will be consolidating in this direction. A pullback is going to consolidate in the opposite direction. You're getting consolidation in the opposite direction. You're getting more blue candles than red candles. We're going up, we're going up, we're going up, we're coming down. We're trying to get higher and higher and higher. When you get equal with this the last time, like these two right here are probably the one that I would take or whatever, and then I would protect myself to below this wick. But you got 1 minute, 2 minute, 3 minutes. We hit the 200 EMA. I personally get out. So it takes me from 59 to 64, $5. $5 on average is what I'm getting in my trades. We get above the line, I can take the trade now. You get that nice little big move right there, giving you $3. Now it gets choppy. I'm out of trading after that. By 11 o'clock, you also have to be very aware of the time frame, but notice we get above the 200 EMA. By 11 o'clock, I'm done for the day most of the time. So let's go ahead and go to the 5 minute time frame, right? So now the 5 minutes offering bigger trades. The 5 minute time frame, We're struggling to get above it, struggling to get above it, struggling to get above it. This is 8 o'clock in the morning. If this is 8 o'clock in the morning and 8:30 is coming up, and 8:30 doesn't get back to this 200 EMA, honestly, at 8 o'clock in the morning, I just would have took this trade off of the 200 EMA right here, right? And I would have just enjoyed that ride down. I mean, we never even got back to the 200 EMA. So then 8:30 comes around, and if 8:30 doesn't show me signs of pushing up, like if 8:29 doesn't push up into this, I know that I can hold it through 8:30. We're going in the downtrend. This is a much slower trade than I normally like, but it's fine. I'll take it. I'll just ride it out all the way to 9 a.m. 9 a.m. comes along, and I'll be like, okay, do I want to get out of this trade or do I want to stay in it? And if we're not pulling back up, like I said, I'll stay in the trade. 9:25, good push down. 9:30, great push down. 9:35, super push down. We hit this blue line right here, I'm out. Why? And look what happened. We went through the blue line, came back up, shot up some more. Shot up some more. Finally, the massive pushback at 10 o'clock. 10 o'clock is always a great time to take a trade, especially when you're having this accumulation. This here is accumulation. This is not consolidation. Consolidation for continuation would have been trending down. This is accumulation. They're accumulating orders to take us back the other way. They're fighting it out. You can get a breakout to the downside, but you would have been trending that way. You were trending up in this situation. Massive push up. Guess what? We hit that 200 EMA. We get a quick rejection. A lot of times I'll take this quick rejection for the few dollars that I know that we're going to get. And then if we don't get all the way through this candle, I'll just get out whenever it starts to reverse, right? We get this candle right here showing that we're going to get a continuation to the upside. Once we break through the 200 EMA, I'm getting back into the trade. So 57, we're going up. Beautiful. 50, we get up here. We hit I probably, unless we blew through this, would have got out right here because that's just where my take profit would have been. But you're talking about 67 to 72, which is $5. A lot of times it's going to be $5. We start pulling back. We get back down below this blue line here that I got off the 4-hour 200 EMA. I mean, not the 4-hour 200 EMA, the 4-hour time frame. And then we start pushing down. So now you get a 73 and we shoot directly through the 200 EMA. That's something you understand. When you blow through the 200 EMA, you're going further. You're going much further. It is always easier to go down than it is to go up. This is a 5-minute candle. We blew through the 200 EMA. We pulled back. If we don't go into the 200 EMA, I'll stay in the trade, and it pushes down further. So now we go from 72 all the way to 60. Because this is where I would get out at, where I was pulling back. So 72 to 60. So now we get a $12 play in 10 minutes. All right, we get an equal low. Let's go to the upside. Reject the 200 EMA as always. Get a big candle to the downside. Start consolidating to the downside, and it does push lower, but that's as far as it goes. It doesn't go all the way down. And then we start to reject and go back up. Break above the 200 EMA. You can take these trades. You can protect yourself to right here into this area or to below this candle, and you'll be fine. That is a 7 to 4. That's a $7 protection. It's very large. I probably would have took like a $3 to $5 protection personally. Or just waited until we were completely above it and not coming back. So then you get these two plays here from 67 to 73. Again, another $6. And then you reject that line there. You get out. You can take it to the downside. There's plenty of opportunities to take trades. 12 o'clock is noon. Noon is when we get like a nice slow move through the lunch hour. But we're above the 200 EMA. You can take this slow ride up until 1 o'clock. 1 o'clock, we actually got a nice continuation. Sometimes you will see a reversal. But in a nutshell, that is how this is working. Now, when we're falling, right? That's when your 1 hour time frame comes into play. Our 1 hour time frame is coming up to meet this right here. But the only times we hit the 1 hour time frame is when we're falling, or when we're rising a lot. Okay, so like days like this where we had a zone, this used to be the ceiling and everything. This used to be our supply zone. When we have a supply zone and we start falling, and then we get that really aggressive fall at 9 o'clock, we're going to hit the 1 hour 200 EMA. When we hit it and break it, you just need to stay away from it. When we hit and break a 1 hour 200 EMA, stay away from it. They're going to accumulate for quite a while underneath. When we get back above it, you can take the trade. So this was Tuesday. Wednesday, we trade that. We have a brand new zone. You can trade this zone or you can ignore it. You cannot trade for those days. We get back above that 1 hour 200 EMA. We get a play from 61 cent all the way up to 800. I want you to understand that this is 8 o'clock to 9 o'clock. This is a 2-hour play that took you 20 plus. I'm sorry, I said $20. That took you $40 in 2 hours. That is when you hit the 1 hour 200 EMA. The 1 hour 200 EMA is a very strong reaction. That's when you're going to get your $20, $30 plays, right? But now even stronger than that is the 4 hour 200 EMA. This is for my swing traders. When we hit the 4 hour 200 EMA, we break down below it. You can take it to the downside. That's 48 all the way down to like 94. When we break through it, you can hold a trade to the downside for several days, right? When we're coming back up and we get those equal lows and you're like, let's go, you can wait for this action right here where it wicks down, and then you get into the consolidation area. But once we break it again, you can just take that trade to the upside on the 4 hour time frame. And look what happens when we break it. When we break it, we go from 55.37 all the way up to, I'd say right here, 56.37. So you're talking about going up $100 in 1 day, 2 day, 3 day, 4 day. Oh no, it's 3 days. So $100 in 3 days. We consolidate, we jump up, we consolidate, we rise higher. So we'll go from the consolidation at 56.88. And then we took it up to 57.92. So we took it over $100 on Wednesday to Thursday. We took it over $100. So when you hit the 4 hour time frame, there are going to be drastic changes. If you're above it and you're going down through it, you're going to have a massive push to the downside. If you're below it and you're going up through it, you're going to have a massive push to the upside. You're talking about hundreds of dollars, so tens of dollars on SPY, usually in a couple of days or a week. So that's a great thing for you swing traders. The daily, when we hit the 4 hour the 200 EMA on the 1 hour, on the 1 day, the move is going to be astronomical. Here we are November 23rd, and we didn't touch it again until August 2024. November 2023, August 2024, the next probable time we touched it. And you saw what happened when we almost got there. We went from 51.28 to 25, whatever, all the way up. No, I'm sorry, 50. This was what, 51.21, all the way up to 59. So we went up $800 after touching the 1 day 200 EMA. But that's the gist of it. This is the thing. Trading it, scalping it. Scalping is just off the 1 minute one and the 5 minute. I guess I can explain that for real quick. Scalping it comes off of the 1 minute and the 5 minute. And when you're scalping, I'm looking for something very specific to happen. I'm looking for us to go through it and not come back through, and then I'll take it because we will come back on the 1 minute and we'll touch it one more time. And if we didn't go through and pull all the way back up, I'll take the touch right here like this, and then I'll be like, okay, I'll take 79 until we get to the bottom of consolidation, which is 78. So that's like $1. But on some of the times you'll get much more of a move like this down here, like we're getting now. You'll get these previews of what's about to happen, like you guys just saw it happen. 1, 2, 3 times we couldn't push back up into this candle right here. That's a continuation pattern. Okay, so you can just take that trade to the downside and just enjoy the ride down. And you'll get that several times. This one right here, we couldn't get back down this way. 1, 2, 3, continuation pattern this way. But that is the gist of it. If I go to the 30-second, you'll see we actually get a lot more reaction towards this 200 EMA than you think. And then we get all of this push to the downside, and that's about $8. I hope that explains it. It's not something you can just jump right in and start using. You're going to have to do some research. You're going to have to do some back testing and some practicing with it. I do it every day, every single day. So you got to understand that if you're doing something every single day, you're going to get better at it no matter what. Give it a try, practice, and you're going to get better. Is it a shortcut? Is it an easy route? It's not, because you have to learn how to do it in the first place. Just because everything that I just explained to you is not going to make you good at trading it until you get a lot of practice in it. So paper trade, or trade micros, or do whatever you want to do to, whatever is going to cost you the least and let you last like 30 days of doing this is going to get you there. Like I say, give yourself 30 minutes a day, 30 thorough minutes a day in the market for 90 days. You'll get your 45 hours of practice time, and you'll see a difference in your trading. You guys have a great night. I'll catch you. It's like, what time is it? It's like 9:30 now. I'll catch you guys tomorrow. And yeah, that's it. That's pretty much. I want to say that's all there is to it, but that's not true. There's clearly more to it. It's just you have to spend time with it.